Welcome to another audit walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over Audit Area 4. This is Section C1. This is a remembering and understanding topic. Identify the factors that an accountant should consider when performing a preparation engagement. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. We will teach you in that 1 hour how to pass the CPA exam. We'll teach you the key ingredients, so make sure you check out that webinar, and after you watch that, you're going to want to learn more. Make sure you check out becoming a SuperfastCPA Pro member. SuperfastCPA Pro members get access to the full versions of these videos. In today's video, we're only going to be going over 5 questions, and the honest truth is that we're also only going to go over 5 questions for the member version of this video, but typically the member version is 10 questions long, so they get a little bit more help and a little bit of extra understanding. Now, in today's video, again, we're only doing 5 for both versions because this is a pretty small topic, a pretty straightforward topic. Preparation engagements aren't too difficult to understand, but we're going to dive more into compilation engagements in a future video, so that'll be something that we dive into more. But in this video, again, we're only doing 5 questions for preparation engagements. But if you want to become a pro member, you'll get access to the full versions of the videos when we do 10 questions. Now, with all that, let's dive straight into the questions. All right, here we are at question 1. Let's just dive straight in. Which of the following best describes a preparation engagement performed under the Statements on Standards for Accounting and Review Services, or SARS? And remember, I mentioned talking about that in a previous video, so now we're actually going to dive into SARS a little bit. Let's talk about the different options. Option A, an engagement in which the accountant assists in preparing financial statements and provides limited assurance that there are no material modifications needed. Option B, an engagement in which the accountant prepares financial statements without providing any assurance and does not issue a report. Option C, an engagement in which the accountant expresses an opinion on whether the financial statements are presented fairly in accordance with the applicable financial reporting framework. Or option D, an engagement in which the accountant applies agreed upon procedures to specified elements of financial data and reports findings without providing any assurance. So again, which one of these is something that is a preparation engagement? Now, if you watch the other videos or if you kind of have a little bit of experience, you probably already have picked out 1 or 2 of them that sound a lot more like something new than, something we've already covered, like maybe an audit or maybe an agreed upon procedures report or something like that. So if you know, that's great. If not though, that's okay. We're going to use this question to start learning. So let's dive into the explanation together. All right, here we are at the answer. B, an engagement in which the accountant prepares financial statements without providing any assurance and does not issue a report. So let's go into this explanation. A preparation engagement is the most basic service under SARS. So not SSAE, this is under SARS. The accountant assists in preparing financial statements, but does not provide assurance and does not issue an accountant's report. This distinguishes it from a review, which was choice A, which provides limited assurance and includes a report. And it distinguishes it from an audit, which was choice C, which provides reasonable assurance and includes an opinion. And that's kind of like the big thing in audit, but what we're talking about right now is different. And an agreed upon procedures engagement, which was choice D, which is not part of SARS and involves performing specific procedures without assurance. So again, we kind of just learned there what a preparation engagement is. Essentially, it's just the accountant preparing financial statements without providing any assurance, and they're not issuing a report. All they're doing is providing the service of preparing the financial statements. So they're not doing very much. With learning that though, now we can go to the next question. So let's go to question 2. All right, here we are at question 2. Which of the following best explains why a preparation engagement does not require the accountant to be independent? So we just learned a little bit about what a preparation engagement is, so why, with what we know, would they not require independence? So let's go through the options. Option A, because it is a non-attest service performed under SARS and does not involve issuing a report or providing assurance. Option B, because the accountant is only issuing a disclaimer of opinion which does not require independence. Option C, because it is an attest service under SSAE but limited in scope, so independence is waived. Or option D, because it is a consulting service and consulting services do not require independence. Now, again, based on what we learned in the first question and maybe what you've learned in other videos or in your review course, you probably already have 1 or 2 of them that sound like the right answer and the other ones don't really make much sense. So maybe think about this, pause the video if you need to, and when you're ready, come back. We'll look at the answer together and learn a little bit more. All right, here we are at the answer. A, because it is a non-attest service performed under SARS and does not involve issuing a report or providing assurance. So let's go through the explanation. It's pretty simple. Preparation engagements are classified as non-attest services, meaning the accountant is not providing assurance or issuing a report. These engagements fall under the Statements on Standards for Accounting and Review Services, or SARS, not SSAE. And I mentioned that before. Because they are non-attest, independence is not required, unlike in an attest engagement, where the accountant provides a conclusion or opinion and must be independent. So we learned a little bit more there about the preparation engagement. It's a non-attest service under SARS, and therefore you don't have to have independence, or you don't have to figure out independence for a preparation engagement. So we learned a little bit more there. Now let's go to the next question. All right, here we are at question 3. Which of the following is required in a preparation engagement performed under SARS? So what is required? Let's go through the options. Option A, the accountant must provide a written representation letter from management. Option B, the accountant must provide an oral report summarizing the procedures performed. Option C, the accountant must document all issues identified and report them to those charged with governance. Or option D, the accountant must include a legend on each page of the financial statements stating that no assurance is provided. Okay, so what is required in a preparation engagement? If you have any idea, that's great. If you don't know though, that's fine. We are going to use the explanation to learn this. So let's dive into the explanation. Okay, here we are. The answer is D. The accountant must include a legend on each page of the financial statement stating that no assurance is provided. So this is kind of unique to a preparation engagement. Let's dive into this. In a preparation engagement, the accountant must include a clear legend on each page of the financial statements indicating that no assurance is provided, such as no assurance is provided on these financial statements. A signed engagement letter is also required, and the accountant should retain a copy of the prepared financial statements. So those are a couple other requirements / things that are typically done. So again, we learned 3 things there. They are required to have a legend saying that there's no assurance on each page. They're required to have a signed engagement letter, and they should retain a copy of the prepared financial statements. However, a representation letter from management is not required, and that was option A, and the accountant is not required to, but may, identify or report issues. So they may report issues, they may report significant issues if they notice them, but they're not required to identify and report them. And that was option C. And they also don't have to provide any kind of oral or written report, which was option B, since no report is issued in a preparation engagement. Okay, so we learned a little bit more about the requirements of a preparation engagement. Now let's go to the next question. All right, here we are at question 4. In a preparation engagement, which of the following is the accountant primarily responsible for? So let's dive into this. Option A, ensuring the financial statements are complete and accurate. Option B, preventing and detecting fraud within the entity. Option C, preparing financial statements based on information provided by management. Or option D, assessing internal controls and reporting deficiencies to management. So what is the accountant / auditor going to be doing in this situation? What's their responsibility? It's probably a little bit different than what we've learned in other kinds of engagements. So pause the video, think about this. You can probably think through this, and when you're ready, come back. We'll look at the answer together. All right, here we are at the answer. C, preparing financial statements based on information provided by management. That is the main responsibility of the accountant / auditor in a preparation engagement. Now let's go through the other ones that really aren't their responsibility. In a preparation engagement, the accountant's responsibility is limited to organizing and preparing financial statements using information provided by management. The accountant does not provide assurance, does not verify the accuracy or completeness of the information, and is not responsible for detecting fraud or assessing internal control. Management, not the accountant, is responsible for the accuracy and completeness of the financial information. So essentially, the accountant, all they're doing is preparing it. They are not trying to verify anything. They're not responsible for the accuracy or the completeness. They're really not responsible for anything other than just preparing it. You know, they can probably talk to management and tell them if they notice something's wrong, but they are not responsible for that. Now with that, let's go to the next question. All right, here we are at question 5. Which of the following situations would most likely cause an accountant to decline or withdraw from a preparation engagement? So let's walk through this. Option A, management requests that substantially all required disclosures under GAAP be omitted and the omission is disclosed. Option B, management refuses to include a legend on the financial statements stating that no assurance is provided. Option C, management requests that the financial statements be prepared on a tax basis rather than GAAP. Or option D, management provides financial data that is missing some information but states it will be finalized later. So again, what is a situation where it would cause the accountant to most likely decline or withdraw from a preparation engagement? Now, if you have no idea, that's okay. But if you kind of want to think through this and kind of give it a good guess, then pause the video and think about it. And when you're ready, come back. We'll look at the answer together. Okay, here we are at the answer. B, management refuses to include a legend on the financial statement stating that no assurance is provided. So this would be something that would make the auditor or accountant decline or withdraw from a preparation engagement most likely. Let's go through the explanation. An accountant may omit substantially all disclosures required by the applicable financial reporting framework, such as GAAP, if management requests it and the omission is clearly disclosed. This is allowed in a preparation engagement. So that might have been something that caught you up that, sounds like it's not true, but it actually is true. You can omit substantially all disclosures required by the applicable framework. Usually we're using GAAP if management requests it, as long as that omission is clearly disclosed and it's not for some reason to hide things. However, if management refuses to allow the inclusion of the required legend on each page stating that no assurance is provided, the accountant must decline or withdraw from the engagement. That legend is a non-negotiable requirement under SARS. So if management isn't going to, for some reason, allow the accountant to put there's no assurance on each page, then the accountant probably should withdraw or sometimes they might just decline it up front. Or I think I've also seen that you might be able to switch it to like something more like a compilation, like kind of change the de-engagement type. Usually you just want to know that you need to withdraw or disengage from the engagement, because if management's not letting you do that, that is a requirement for a preparation engagement, so that's not good. The other situations, A, C, and D, do not in themselves preclude the engagement as long as proper disclosures or follow-up procedures are in place. So we learned a little bit more there about preparation engagement and, when they probably wouldn't want to take it or when an accountant would want to withdraw. Now with that, we learned a lot in 5 questions. And before we do anything else, let's do one more part of the SuperFast CPA process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up in the questions. You've seen 2 or 3 or 4 questions trying to teach you about the different requirements for preparation engagements, or the different things that is management's responsibility compared to the accountant's responsibility, or whatever the case is. Again, you notice these things throughout the questions, and so you take a moment and write them out in your own words as the pillar topics or the key points based on what you learned from the questions. And as you're doing this each day, you are building your own personal repository of the most important things you learned from the questions so that you are ready for test day. So let's go ahead and take a look at the pillar topics for this video. Okay, here we are at the pillar topics. Let's just dive straight in. First off, the definition and scope. We already went over this, but I just want to say it one more time. A preparation engagement involves preparing financial statements without providing assurance and without issuing a report. It is governed by SSARS, so not SSAE, and is not considered an attest engagement. So again, it's not considered attest engagement, so non-attest classification. Preparation engagements are non-attest services under SSARS, not SSAE. Because they are non-attest, independence is not required. Now let's talk about the required elements of a preparation engagement. The accountant must include a legend on each page stating no assurance is provided. A signed engagement letter and a copy of the prepared financial statements must also be retained, or should be retained, even if it's not a must. Now let's talk about management versus accountant, their responsibilities. Management is responsible for the accuracy and completeness of the financial data. The accountant's role is to prepare the financial statements based on the information provided, and that's pretty much it. Now, at the end, when would an accountant want to withdraw? The accountant may omit disclosures if disclosed, but must withdraw if management refuses to include the required no assurance legend on the statements. That is something that is required. So if management doesn't want to have that for some reason, then the accountant is going to withdraw or decline the engagement, or potentially try to change the type of engagement that management is looking for. So with that, again, we went over the pillar topics, and that is the end of this video. Remember, typically, SuperFast CPA Pro members get access to the full versions of these videos where there are 10 questions. As a reminder, in today's video, we're only doing 5 questions for YouTube and 5 questions for members because it's not a super difficult topic. We don't really need to go much deeper than this. But normally, SuperFast CPA Pro members, again, get access to the full 10-question versions so they get a little bit more help and a little bit more understanding. So if you like this and you like our other videos, make sure you check out becoming a SuperFast CPA Pro member. And the easiest way to do that is actually by going to SuperfastCPA.com and signing up for our free 1-hour webinar training. Again, in that 1 hour, we will teach you the key ingredients to passing the CPA exam for free. And after you watch that, you're going to want to learn more, and you're going to have a much better path to becoming a SuperFast CPA Pro member. So check out the webinar, then check out becoming a Pro member. Now, if you like the video, make sure to like it and leave a comment. I hope this was helpful, and I will see you in the next video.